From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 14, 2017. In just a moment, we'll be taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. But first, I want to recap one of the trade suggestions made yesterday in the trade room. We're looking here at the GBP USD, Great British Pound, versus the US dollar. I think it's important here, of course, to note that it fell from the green zone here at the 1.2517, 1.2535 level, all the way down to the orange zone, and has come to a halt, a complete stop right there at the orange zone, 1.2475, 1.2455. But this is exactly what we spoke about during the trade room yesterday. In fact, probably a better viewpoint of this is taking it down to the daily time frame, and we zoomed way in here on the daily time frame, and take a look at it here on this this time frame, where we see the past 1, 2, 3, 4, 5, 6, 7, 8 days now, today included, but 8 days now have been constrained between the green and the orange shaded area, just like we were looking at there on the 4-hour time frame. So we observed this yesterday. We can see this little red trend line connecting with this high and this high here, right around the 100 period moving average. And so we decided yesterday to go ahead and take a short there into the green shaded area and the 1.2520 level. And you can see the trade going down at the bottom of the chart, 1.2520. Currently sitting 40 pips of profit on the trade. Can't lose on the trade. The trade manager has taken us to locked in our stop loss into profit. So it did exactly what we thought it might do. Stay within that range. Now, at one point in time, it will break out of this little box, this little blue box or range between the green and orange zone. Hopefully in our favor and move below the orange zone and continue to move lower. If it doesn't, of course, like I said, we should be protecting profit in all cases. But it did exactly what we expected it to do yesterday in the live trade room. Fell off of the green zone, went back to the orange zone. Nothing really new. It continues to do the same thing over and over for the past 7 or 8 days here on the pound dollar. All right, now let's move over here to the USDJPY, the US yen. First off, the trend line, the blue trend line, is what the trend has been for quite a while now. We go back to the top of the chart, top of the blue trend line. We're looking all the way back to January 3rd. So since the beginning of the year, really the first significant trading day of 2017, it's been primarily in a downtrend. I say primarily because there was this period here where it had some up and down within that blue box, and it made a new low down here into the 1.11s, and now it's made its way back up. I think what's most significant, and I'm going to go ahead and zoom it in one more time because now we know where that blue trend line comes from. The most significant is that yesterday opened and closed above the trend line, and today sitting on top of it. So we can see that there's been a little bit of a change in the overall pattern here for this currency pair. Where it was at a downtrend, making lower highs and lower lows, we've seen a short-term change in that pattern where now it's above the trend line, which it hadn't been prior to this, and we see it opening and closing above support, the orange shaded area. So let's we would assume, of course, once it opens and closes above there, that same area that was resistance 1-2 days here becomes support. That orange shaded area, by the way, 113.45, 113.20 is that orange zone. So it's my expectation that as long as it sits on top of the blue trend line and the orange shaded area, that is our support. And of course, our next resistance, clearly, it's not too hard to see, is the yellow shaded area. So we don't have a lot of room to work with. We're just bouncing between the orange zone and the yellow zone. Now, if it can break through that yellow shaded area in the continuation of this change of the trend pattern where it's gotten above the blue trend line, then of course our next area to shoot for would be the green or the pink shaded area, which the pink shaded area, of course, is where the market found resistance inside this blue box over here on the left hand side, and that's all the way up into the mid to low 115s. That's a significant rise higher. All in all, what's the risk here? The risk is that it changes. It gets back under the blue trend line, back under the orange zone, and goes back down to the purple zone. So we know what the risk is. The risk is a breakthrough support and it goes lower. We know what the potential profit is. The yellow, the green, the pink shaded areas on the way higher. So we know there's a fairly low risk, higher reward opportunity when it dips into support, sitting on top, again, of the orange shaded area and the blue trend line. Now, I understand the previous trend was down. There may be some opportunity to go short. I don't think you want to go short sitting on top of the orange zone. That doesn't make a lot of sense at all right now. Going short on top of the support never makes sense. If you were going to go short, you either want to be at the yellow zone or under the orange zone, up here into the 114 level or under the orange zone. So it doesn't make a lot of sense today to go short yet, unless we get some fundamentals that cause it to turn in that direction. Most likely, it's my expectation to go long here above this. Now, Forex Black Book is red as well, so that gives us a little bearish bias. But again, I think some of the technical aspects of the chart are showing us some evidence of potential change of the direction of trend, momentum, and sentiment. 4-hour time frame, just to give us a little bit of a zoomed in view here. Take a look at what's been happening on the 4-hour time frame since Friday. We got above the orange shaded area, zipped back down to the orange zone, found support. We had the gapping over the weekend. It pushed back higher into the yellow zone, a retest back down here to the orange zone. So nothing really changes when you get down to the smaller time frame, does it? Still, the orange zone's your support. You don't really want to sell on top of support. The yellow zone's your resistance. You're going to target that resistance. And if it does break through the orange zone, that's our risk. We know it. We need to put an appropriate stop loss on the trade if you're going to go long here. I would say an appropriate stop loss, not too hard to see, that if you're selling around, or sorry, going long somewhere around the 113.40 or so level, which is where I am, you're only looking, back down here underneath the orange shaded area, the blue trend line. You're looking at about a 40 to 45 pip stop loss. I don't think that's too incredibly terrible, especially if it makes its way back up into the green or that pink shaded area that's above it. You're looking at maybe about 60 pips back to the yellow shaded area. So 1-to-1 back to the yellow shaded area, but of course much better if you start to target much higher, and we do see some continuation higher for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.